First of all, from the state's revenue perspective, the reports that companies, my clients, had to file a few years ago to provide numbers to the comptroller showed that over the several years there was not a significant revenue-raising result for the state of Maryland. The numbers showed an extremely volatile situation, increases in some years, reductions in other years, and yet over the time period, not a significant revenue raiser for Maryland. That volatility would make budgeting for the corporations, for the businesses, very difficult, and that volatility would make budgeting for the state's revenues very difficult. And from a competitiveness posture, we have to remember that Maryland's major competitor states don't use combined reporting, don't require combined reporting. Businesses also see that combined reporting is not the loophole closer that the proponents call it. The proponents say that it closes down shifting of income out of state, and yet the proponents don't mention that there are other laws that corporations, my clients, are dealing with that were passed by the Maryland legislature in 2004. For example, what's called the add-back law, which disallows deductions, as well as the 482 powers, which allows the comptroller to reallocate income and expenses among related companies. These are things that corporations are already dealing with, and combined reporting adds nothing to these things. And lastly, and perhaps most importantly from a CPA's perspective, is that combined reporting is extremely complex. It is perhaps one of the most complex things in multi-state taxes. Across the states that use it, literally millions of dollars are spent every year and many, many hours by the internal tax departments of the corporations, by their outside advisors, the lawyers and accountants, trying to interpret the state laws, dealing with the states in audits and ruling requests about how it applies, dealing with litigation in fighting over how it applies or doesn't apply. And this complexity is borne by all corporations that would be subject to combined reporting, and that is all corporate groups, whether they're large mega corporate groups, big corporations, or whether they're smaller corporate groups. Combined reporting applies to all corporate groups. And so the adoption of combined reporting would greatly increase the expense of administering Maryland's corporate income tax for all corporations, large and small, as well as for the comptroller's office. So why get into such a complex and expensive system when the numbers show that it's not a good thing for Maryland's revenue and it's not a good thing for Maryland's competitiveness? When we're talking about sales taxes and proposals to expand the sales tax base to impose sales taxes on professional services, this is an idea that would also add complexity to Maryland's tax policy as well as make us uncompetitive. Our competitor states do not impose sales taxes on professional business services. And our experience just a few years ago in Maryland with the computer services tax that was enacted and then repealed brought out many businesses who showed how easy it would be for them to relocate out of Maryland and into one of the neighboring states that don't impose sales taxes on services, where these businesses wouldn't have to charge this sales tax. So it would be uncompetitive if we impose sales tax on services in Maryland. In today's world of multi-location providers of these services and multi-location customers of these services, it is extremely difficult to determine where the taxable service would be occurring and which state would be owed the tax. You know, an easy example. As a CPA, I'm sitting in Baltimore in my office. I'm on the phone with my client who is headquartered in Virginia. He has conferenced in his plant manager in Ohio, and the Ohio manager has an Indiana tax question for the Indiana operations of this Ohio division. Where's the sales tax? Is it in Maryland because this is where I'm located when I'm answering their questions? Is it in Virginia because that's where my client who's paying the bill is located? Is it in Ohio because that's where the guy who's originating the questions is located, or is it in Indiana? Because that's where the subject of our conference call and our advice is. You see, it's very complex.
Again, you have to sort of predict the bigger picture of things as the legislative session winds along. I don't think those ideas have the type of traction necessary. I think they have so much pushback and opposition throughout the broad-based business community, including the leadership of the Maryland Chamber of Commerce. To me, the more likely issues to be pushed in this session that may have a direct anti-business or anti-competitive effect are employment and labor issues, things like the sick leave, mandatory paid sick leave, flexible scheduling. Those are ideas that we hear getting kicked around more, trying to gain some traction from the other side of the aisle, so to speak. I hope that those ideas, things like combined reporting and expanding sales tax to a wide variety of services, never really takes hold. I think what we found in Maryland over the 8-year period from 2006 or so till 2014 or so was that raising people's taxes, raising business taxes, constantly just raising tax after tax after tax, at some point in time, you reach an inflection point where business can't sustain it, from large businesses to small businesses to individuals living in the state. And it actually has a decrease in net revenues, and it has a decrease in population flows, job creation. And I hope that most of my colleagues here, have learned that lesson or have appreciated that lesson.
Even though a lot of us don't agree with the combined reporting and the sales tax on services, there's certainly not much we can do to prevent those members who feel they're good ideas and want to put that kind of legislation in. Regarding sales tax on services, I really don't think there's any real movement in that direction from the legislature, so I would hold little hope for that happening this year. I don't think it will happen. Regarding combined reporting, it's been every year, and most of Maryland businesses don't want it. I think it creates a lot of volatility in the marketplace that I don't think is good for Maryland. And while I hope it wouldn't be introduced, I suspect it will be. However, I do hope and I think that it probably won't have the votes to pass this year.